So we're going to start today's video with a curious comment from Elon Musk. I saw this on X from Mario. Quote, X will do anything except your laundry, payments, AI magic, video thrills, and job hunting. X is leveling up to the everything app you can't live without. Elon Musk replies, it will even do your laundry when Optimus is available. Let's take a moment and try and process this comment. X will even do your laundry when Optimus is available. This is quite clearly the strongest signal yet that X and Tesla will have intimate ties. And while obvious things are obvious, I am going to say obvious things. Grok, the current X-powered AI, language model, and image gen, obviously coming soon to an Optimus near you. Also a Tesla near you. While we're on the subject of Tesla's humanoid robot and AI, which is kind of weird because they're just a car company apparently. Or are they? I saw this from Gary Black. Love you, Gary. Quote, Tesla retail investors have long argued Tesla is more than just cars. Apparently, Tesla institutional investors are starting to preach the same. His post continues. Paradoxically, 28 Wall Street analysts out of 60, equating to 47%, are recommending that investors buy Tesla, but only 4 of those 28 with buy ratings have price targets above the current $428 price. So, just going to say that again. 28 analysts are recommending investors buy Tesla stock. Yet, 24 of those analysts who are currently recommending investors buy Tesla stock have a 12-month price target on Tesla stock less than Tesla stock's currently trading for. Gary continues, reasoning that means there is another round of price target increases coming, likely after earnings are reported on January 29th. Meanwhile, the gap between the average Tesla price target, $318, and where Tesla traded today, $428, has not been this high since November 2021. And here on screen now, everyone recommending investors buy Tesla stock and their corresponding price targets, just the 4 over Tesla's current closing price as I record this. Of note, which I did point out recently, until late last year, there were literally 0 analysts with a price target on Tesla over $421 per share. The stock got close to $490 toward the tail end of December. And not a single analyst, even those with buy ratings, had a price target over $421. Awkward. Note, by the way, these recent price target changes, mid-December, January, December, January, November, December, January, December. What's going on? Was there any new meaningful information from Tesla in the last month and a half? Nope, nothing. What did happen in the last month and a half? Well, the stock surged, but nothing meaningful about the business change. If I didn't know any better, I'd think these folks were just chasing after the price of Tesla stock and then trying to reverse engineer a reason for why they're chasing after the stock price as opposed to actually analysing and anticipating. But hey, that's just me, extremely skeptical, arrogant, obnoxious twat on the internet who makes content and doesn't wear a suit. Quick look, a snapshot at analyst recommendations on Tesla stock as I record this, almost 47%, with a buy recommendation on Tesla. Not far off 30% hold, 25% sell. While we're on the subject of analyst recommendations, buy, hold, or sell on Tesla stock, let's look at these very recommendations, plus the 12-month price target versus Tesla stock over the last half a decade. What we're seeing here, green equals a buy recommendation, gold, just hold the stock, and red, sell. The white line is Tesla's stock price itself, and the orange line is the average analyst price target. Now, if on average the analysts are earning their keep, analyzing as opposed to chasing, anticipating as opposed to following, and they're not completely incompetent, just total fucktards. After all, they're pretty well compensated, so you'd hope they're not DMFs. What you'd see here would be huge, towering green bars, as in buy recommendations prior to the white line surging, e.g. analysts saying, hey, buy Tesla stock. Next minute, the stock surges. Therefore, if you followed their advice, you made a lot of money. That's what you'd want to see here if this industry on average was competent. You'd also want to see the orange line, which is the average analyst price target, 12-month price target, roughly 12 months, which is 12 of these bars, ahead of the white line, which is the actual Tesla stock price target. You'd want to see an orange bar leading the white bar by about 12 months if they were pretty competent at predicting the stock price over a 12-month period. Of course, there's a lot of volatility, so you've got to give them a little bit of lenience here. But the last thing you'd want to see, the thing you would not want to see, unless, of course, you wanted evidence that they're all incompetent fucks, obviously there's exceptions, but the majority, the last thing you would want to see would be something that looks like this. Oh, wait, hang on. But this actually is the thing that we're looking at, and it does look like this, which is the last thing we'd want to see. What do we see here? We see Prior to Tesla stock's epic run for the ages, the stock went up, give or take 5, 6, 700% within a couple of years. You definitely wouldn't, prior to that increase, see extremely low, near record low percentages of buy ratings on the stock before it surged, right? Because that would mean that if you'd been following the advice of the average analyst, give or take about 75% of which said either sell the stock, which is the majority, or hold the stock but don't buy the stock before this epic run, you would not want to see that, because that would suggest that roughly 3/4 of the people covering the stock had no fucking clue. Yet that's exactly what we see. You also would not want to see the orange line, the average 12-month price target, seemingly chase after the actual price of Tesla stock. And what that would look like would be a short delay between the white line going up, followed by the orange line. But that's exactly the fuck what we see. White line surges, and after the white line surges, a month later, some of the price targets start going up. White line keeps surging, a month or 2 or 3 later, price targets surge. I mean, this is just truly an indictment on the entire industry. We have a perfect display of chasing behavior, failure to anticipate. If we just look at this at big picture stuff, right? The white line surges, as in the stock price. Tesla actually surges. Almost immediately, the orange line starts surging, almost like these dumb fucks are chasing after the stock price. At the same time that happens, many of the folks who are recommending investors sell Tesla stock or hold Tesla stock have now changed their tune, hence the increase in the green bars, to buy the stock after it surged 200, 300, 400, 500%, as opposed to beforehand. Round of applause for these morons. Worse still, as Tesla stock approaches its peak all-time high closing price, at least to date, not before, we now have almost twice as many analysts recommending Tesla's stock as a buy near its all-time high compared to just a couple of years earlier before the epic run. But it gets worse, not far off its all-time high, having come back a little bit to reality. It's so fucking embarrassing. The orange line starts chasing the stock price lower, and after a short delay, suddenly those buy ratings begin to reverse. The stock surges, the white line surges, suddenly orange line surges as well, chasing again, a bit of a bump in buy recommendations, and then what happens? Well, white line goes down, orange line chases after, and buy recommendations revert to hold or sell. And about 12 months ago, in December 2023, January 2024, we have the lowest number of analysts recommending investors buy Tesla stock for a multi-year period, despite the fact that the stock was down, give or take 40 to 50% from its all-time high closing price, and the company had pulled further ahead, become even more dominant. We're in an even stronger position, never mind the epic AI opportunities underway. Yet, the analyst price targets just seeming to directly chase the stock price down. Again, there's that short delay. The orange line didn't come down before the white line, but after, just like it didn't go up before, but after. And about a year ago, the average analyst on Wall Street don't buy Tesla stock. They're either recommending investors hold or sell. I mean, this is truly an indictment on the entire industry. Just let's look at this, all right? Let's count them. That's January. That's December, right? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, this is December, January, right here. The lowest number of buy ratings on Tesla stock over a multi-year period. We have to go back to, we'll call it like 2021, maybe even 2020, for a higher number of either hold or sell. So Tesla stock at the time of these extreme lows in buy recommendations is now up since then about 70%. It's up about $200 per share. And what do we have here? 6 months ago, July 2024, average analyst price target on Tesla stock, call it like $180 a share, maybe $190, somewhere there. About 6 months later, call it $320. We note again that the orange line followed the white line as opposed to being ahead of it. Once again, Wall Street chasing after Tesla stock as opposed to anticipating it. Now, if I were extremely arrogant, I am actually, so I'm going to, because I am, I would point out that at this point here, July, when these dumb fucks on average thought over the next 12 months, Tesla stock is worth what it's worth right now, because that's how we roll. We just chase and copy and don't anticipate because we're pussies and or incompetent morons. At this point, this was the last time I made any incremental adjustments to my own Tesla fair valuation, because there's been no meaningful information since. That would seem to indicate that I did not in fact chase, but anticipate. But hey, what would I know? I don't even wear a suit, bro, so you can't trust anything I've got to say, let alone my reasoning processes. There is absolutely no excuse for this, guys. It's possible that these analysts are very competent when it comes to analyzing companies that aren't Tesla, but in aggregate, it's clear, beyond a shadow of doubt, that the collective brains focused on Tesla are not fit for duty. The fact that this orange line, the average analyst price target, almost perfectly chases after Tesla's stock, with a slight delay of 1, 2, 3, 4, maybe at most 5 or so months. Chases up, and then if the stock's headed south, chases down again with that slight delay. Just count the bars, right? 1, 2, 2.5 months there, and then suddenly they're chasing down. And then once again chases up is an indictment on the entire industry. There are a few exceptions there. Some of the analysts get it, but if they really got it, they'd quit their job and just buy the stock. So there's that. But the key takeaway here is that a lot of big money, big institutional investors rely upon the supposed analysis of these very intelligent, super capable analysts to inform their investment decisions. And it's these deep-pocketed, big institutional investors that actually move stocks when they buy them. A couple of retailers buying a stock, unless we go full GameStop, doesn't matter, doesn't move the needle. When you've got a big pension fund or big institution that has apparently just discovered Tesla's not in fact a car company, they start buying billions of dollars of the stock over a week period. That's what can move it one way or another. And as Gary points out in his original post, it's only now that some institutional investors are starting to consider the possibility that Tesla may in fact not just be a car company. Another example of a delayed reaction. I'll leave you to fill in the blanks. All I can say is I'm glad I've been buying hand over fist before they figured it out. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail. Legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. And look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.